All right. So I am really excited about my guest today. I've got a good buddy of mine, Aaron Kirchoff. Just going to do an intro to him. Excited to have him on our podcast. So, Mr. Kirchoff began his professional career as an officer of the United States Air Force, where he led financial management teams supporting domestic operations and combat missions to Afghanistan during operation and during freedom. After completing his military service, Mr. Kirchoff joined EARNEST Partners, which is a global institutional asset management firm in Atlanta, where he spent over a decade focusing on product management, business development. And Mr. Kirchoff also holds a Bachelor of Science degree from the United States Air Force Academy, where he was team captain of the NCAA Division I football program. And he also holds an MBA from Oklahoma State University and is a member of the CFA Institute and the CFA Society of Atlanta. So, Aaron, number one, thank you for your service and thank you for coming on the show. Excited to go deep on everything, everything venture and investing and hedge funds as well.
Yeah, absolutely, Joel. I appreciate it. Thanks for the intro and for having me on. As I was preparing for this conversation, I listened to a handful of ones that you've done, most recently, and you got some really awesome people on there, and I'm honored to be a part of it.
Yeah, thank you so much. Well, why don't we kick this off and, maybe start with your early career. I know that you had an amazing decorated career in service, but, what were some of kind of your influences in terms of your professional life? What did you think you wanted to do? And then how did that kind of mold kind of the first steps in your career? And then obviously you got into financial services, which is difficult for everybody. So, it'd be interesting to know some of the resources that they have, in service to kind of help people get into the, especially from the Air Force, getting into, essentially asset management. Finance in corporate, they have the role of FP&A, right? So that's kind of definitely a different function and a different skill set than actually managing capital and asset management. So we'll love to have you kind of talk through all of those initial thoughts and reactions, and then I might interject in between.
Yeah, absolutely. I appreciate it. So I think for me, when I was thinking about getting into the investment world, which was something I've always had a proclivity for, I mean, I've always had interest in the stock market. What makes a stock go up? Why is it priced the way it is? And where seemingly there's news or no news and a stock can go up. In fact, I'll tell you a quick story. When I was at the academy, I really liked investing. I took every one of my elective classes was on either investing or finance or something like that. And so I was investing in like Apple and all the big, like Apple, IBM, all the big tech stocks and things like that. And I was looking at my phone one time, and the stock that I had invested in had great earnings and it made money, and the stock was down. And the stock that I didn't invest in didn't make any money in the quarter, but the stock was up. And I was thinking to myself, like, how is this the case? Like, why is this working that way? And, the curiosity in me was like, okay, let's figure out what this is. And so, it's because it beat the expectations of the market. And so even though it didn't make any money, it beat what the market thought, it was better losses than the market. And so it went up. And so that really sparked a lot of curiosity with me. And so at the academy, you get a starter loan as a junior. USAA gives us, because you don't have anything at the academy. You have a backpack and a shaved head. That's what you show up with freshman year. And so you got to have a starter loan. Most people go out and buy cars and, go to Euro trips and things like that. But what I did was I funded my IRA for 2007 and 2008. I bought an engagement ring and a $4,000 Jeep Cherokee. So that's what I did with my starter loan. I ended up, the woman that I asked to marry me with that engagement ring said yes. We've been married for 16 years. We have 4 kiddos now. So that was a good decision. The Jeep Cherokee that I bought for $4,000 lasted me a couple years. Really good value on that one. But the Roth IRA was the thing that was really great for me. And so another story though, if you know what happened, I got my starter loan in February of 2008, and put it all in an S&P 500. They had financial advisors out there and helping us allocate money. These 19, 20-year-olds who didn't know anything what to do. And if what happened, if the listeners I'm sure know what happened 7-8 months after I put all my money in the Roth IRA, it got basically cut in half. So that was another integration into financial management and investing was this money is at risk, and investing is takes risk to do, and you have to be very good at it. And so anyway, that's just the market. You continue to invest in dollar cost average.
And some of these hedge funds, they have a product called the all-weather portfolio, right? So it's essentially, I think part of investing is being able to stomach those losses and be able to just be able to handle risk. But communicating that to investors and helping them know that, look, there are seasons when it comes to investing, and that's why some people build these, portfolios at the public, asset management level. And I think some of these bigger, institutions, I think like Bridgewater and, Carlyle Group, they have, or Blackstone definitely have those type of products, but
for sure
they're to kind of help essentially weather the storm. Right. And, and then part of it is probably the messaging too, right? Just letting people know, look, this is a volatile market. There's going to be ups and downs, but long term, even if you held on some of those companies when they tanked, some of them have probably 5 to 10x in the next over the decade, in a longer time horizon. They say that, there's a saying that I really like recently. It's not really the time. You can't really time the market, but what you want to think about is your time in the market.
Yeah. It's not timing the market, time in the market. Yeah.
Exactly.
I've heard another good one, which was, I listened to the podcast, The Money Guy Show, great podcast about private wealth, and they're funny, they're entertaining, they're great. And they said the market's like throwing a yo-yo walking up a hill, right? You're walking up a hill, so you're going up over time, but there's obviously those gyrations in the market, and there's products out there that help reduce the amount of volatility or ups and downs in the market. And that's one of the things that we do today at 1180 with the products that we have is uncorrelated to the market. So you have your stocks, you have your bonds, you have your private equity, venture capital, real estate, commodities, whatever it is that your pie looks like. But you want to have a piece of that pie, and a relatively significant, it might not like 1 or 2%, but more like maybe 5-7% of your portfolio, depending on your views and strategic allocations or tactical allocations there. In something that's uncorrelated, that if things are going down, and markets become correlated during times of stress, right? Stocks and bonds in 2022 were both really bad. The 60-40 portfolio got crushed in 2022. So, things tend to correlate during times of stress. So you want something in your portfolio that is truly uncorrelated, with no beta, no market exposure, but can extract returns over time. And that's what we do at our fund here at 1180. It was very interesting to me. You mentioned I came from EARNEST Partners. That was plain vanilla, long only, small, mid, large cap, some high quality bonds, and some international. That is what EARNEST Partners did. Great, huge allocations, and pension funds and endowments and things have huge allocations. As I looked at my career over time, and the point of this podcast and your education company is to help people come up through this system, understand what they want, how they pursue it. And as I looked at my career, I had been in the military for 10 years. I was at EARNEST Partners for 10 years. And I looked at myself, I try to make decisions in decade-long time horizons. And I would really echo that to people who are listening to this or thinking about their career. A lot of times you have people that are making, 1 year or 2 year decisions. Think about where you want to be in 10 years and make that decision and go for it. So when I step back and look at my career, and I said, where is the puck going? How is the pie of a pension fund shifting? What part of that piece of the pie is shrinking, and what part is growing? And when I analyzed that and had a lot of conversations, you have a handful of mentors. I listened to the podcast you had on with Cheryl a few weeks ago.
Oh, yeah.
Unbelievable podcast. I think it was over an hour. I listened to every second of it. It was great. But you have to have a mentor that is help guiding you. And I had a handful of those, lucky enough to have those both in the industry and out of the industry. And they said, hey, alternatives are growing in the portfolios. It's coming down to private wealth and retail are growing. Access to those portfolios and those solutions are growing. And so that's where I wanted to be. So that's where I am at today. And that was one part of the decision I made. So
that's amazing. So, obviously, just to lay out a disclaimer here, this is not an offer to buy or sell security. This is not a solicitation. This is for educational purposes only. But whatever you're allowed to share, Aaron, in terms of like what you learned in your past roles at specifically EARNEST Partners, that would be great to hear about. And then just kind of thoughtfully thinking about like how can someone think about building an investment fund? Like what was going on in your mind? That's a great story, kind of, doing FP&A for the military in Atlanta, so you built some finance skills, right? And, kind of more relevant, I'm assuming, to corporate finance, but now kind of joining, you said it was a long only asset management firm.
Right.
What were some of the skills that you needed to prove to actually land that role? Because that's still a little bit of a pivot from from FP&A corporate finance to now joining an asset management firm.
Yeah, absolutely. When you come out of the academy, or really you come out of school, I think you think of three things. You think being a CFO, just doing budget and accounting and FP&A, like you said, being an investment banker on Wall Street and going to Goldman Sachs or Morgan Stanley, JP Morgan, or being at Edward Jones, being a financial advisor, right? Like that's what I envisioned as the market. And there's this entirely other area that dwarfs those, which is the asset management and investing for institutions, right? And so that was a hard transition for me to understand that that's this huge opportunity set. And so when I came out of the military as a budget officer, doing accounting and budgeting and auditing and things like that, to this investment world for not only individuals, but these pools of capital. And when I was interviewing, it's like, hey, do you want to be, in the millions or tens of millions and do that? Or do you want to be in the billions? And I like the B better than the M. And so wanted to go in that direction. But when I had, my indoctrination, I didn't know what a Russell 2500 was or what a Russell 2000 was. I was S&P 500, NASDAQ, Dow, like that was it. And so being, having, I think going into it saying, hey, I have these hard skills of understanding how to make investments and how to be. I think you had another someone on. It was Brett Ann or someone that was talking about. She had these skills like when you build these funds, it is client service is a huge piece.
Brett was amazing. So Brett was a project manager. Brett was a project manager. And then I think her previous firm, it was like billions of assets, so she pivoted. But if you think about it, it's the same skill set, right? You need to manage stakeholders. You need to probably come up with a timeline of like when things need to be done. Right. And there's difficult personalities. You're putting together documentation, you're putting together research. I mean, it's all the same things that an engineer would do. It's all the same things that like a consultant would do. So I'd say like 75 to 80% of those skills are transferable. It's just kind of like those technical specific acronyms, right?
And that's the ramp. That's your trajectory. And what I did was I said, hey, what gets me the up that learning curve the fastest? And I had a mentor. I said, hey, how did you do that? He was a partner at EARNEST Partners. I said, what do I have to do? I think that's one of the things that I would echo to the listeners here who are trying to get started in this business, whether it's private equity, venture, hedge funds, long onlys, whatever, is find someone at that firm and say, hey, I'm going to tag along and I'm going to lean on you. I'm going to be as helpful to you as I can over time. But I need some jet fuel to go back to my military. I need some jet fuel on this. What gets me some jet fuel? And I think what you'll find is that people who are approached like that with someone who's open-minded, wants to do a good job and progress and help not only themselves, but as they get better, guess what that does? It helps propel the firm. And if you're an owner or a partner of that firm, their best interest is to actually help you accelerate. Yeah. So he said, hey, Aaron, you're going to need a CFA. You got to do the CFA program or the CIPM or the Kaya. I would get really involved with any kind of designation or 3 letters you can put after your name. Obviously, I think you talked to, I think it was Joe about, his MBA or, going out and doing a hands-on. I think, an MBA is probably status quo here. If you have an MBA, it's like, good. Or, whatever, you got to have that. Obviously there's ones that are better than others. I got mine in the military, got it sponsored by the military, which was great, but it's not, it's not one of the best ones, but it is one, right? It gets me
Yeah.
on, it gets me in the conversation, and then go do the CFA, go do the CIPM or the KAIA to get into the alts world, get into the, the reporting world, or the CFA is kind of the gold standard of, hey, I can do the rigor.
Mm-hmm.
Right? And then once you can have that, you're never going to go into a meeting and be totally bewildered with what they're talking about. You're going to have, CFA is, an inch deep and a mile wide, right? You're going to have experience or have touched something, at least curricularly, that gets you at least, part of the way. And then it takes time and effort.
One of my past jobs offered to pay for my CFA, and I just didn't have the energy to sit down and take another standardized test. But I did. I bought all the volumes, and the portfolio theory was really helpful just to kind of understand just the concepts of modern portfolio theory.
Right.
But, I noticed most of those people, they ended up working for Fidelity or like working for like a large asset manager.
Yeah.
So I think, I realized that really didn't help me for alternatives or kind of like more of the high finance, but it's just the terminology definitely helps.
You get exposed across the board. You know, there's a part about private equity, there's a part about venture, hedge funds, options, like all that stuff. It just gives you a good baseline. And then from there you say, you know what? Hey, I really like this section.
Maybe double click on that a little bit.
Let me double. And then you know what? Then the CFA doesn't matter. Once you understand what you want to do, then you pursue it. You connect with folks like yourselves. You get on the platform and you start introducing yourself and getting a little bit deeper. And I think, the niche solutions, I think a lot more asset allocators are looking for that, right? A lot of their portfolios filled with kind of the big name brand solutions products. And then the big movement is around the edges, right? What can they put in their portfolio that gives them a little bit extra? And I think that's going to be highly valuable going forward.
So what was going on in your mind after, you started, obviously you're building a family, right? And you're kind of going through, your professional career, kind of making that pivot. Now you're at EARNEST Partners, definitely is a new career opportunity. What was the trigger that kind of triggered you to go out and build something?
Yeah, it's a great question. I think for one, you said, hey, building a family, running a career and building a family at the same time is very difficult. But you have to have a good support system. My wife is fantastic. She's still in the Air Force. In fact, she promoted to Lieutenant Colonel back in July. So she is still up and to the right with her career. Fantastic. Not only human being, but support system and great officer and person. Anyone who comes in contact with her loves her, never met a stranger. But she was great support system for me. I mean, starting for the CFA, you work, you come home, you get dinner, you get the kids in bed, and that's when you start studying. And so started with 2 kids, ended the CFA program with 4 kids. So that time, but I think for the decision-making point for me was, hey, 10 years in the military, 10 years at EARNEST Partners. What do I want to do for the next 10 years? And, EARNEST Partners is great, fantastic institution. They do great work. They've been around for a long time, and they're going to be around for a long time. But when I thought about it, it was, hey, I've developed these skills. I've developed these relationships. I have an entrepreneurial spirit. I mean, you have to have an entrepreneurial spirit. If you just wanted to run portfolios and pick stocks behind a computer, don't start a fund. Because that's not, go work for a hedge fund or something like that, because that's not how to start a business. Starting a business is going out, meeting people, having conversations, convincing people that your edge is real and you can produce returns that you say you can produce and deliver on that. Messaging, communicating, selling, all of those things is what you have to start a firm. And those are very difficult. One of the things that I think will help your listeners that I learned from my time at EARNEST and transitioned into what I'm doing today is there is a wide gap between people who you can call and who you can go to lunch with and who are your buddies and your cohort. Wide gap between that and someone writing a check. It's a huge gap. Yeah. Hey, you can have the conversation. Maybe your foot's in the door. They answer your email. They pick up your phone calls. That's great. That doesn't mean you're going to get a yes when you ask them for money. So I think that's one thing. You have to have the network and the relationships, but you have to have an edge. You have to have a value proposition, and your ability to communicate that over and over in a compelling way is what's going to build your business. Not just having, people who you can call. So I think this is a great platform for doing the first thing, getting network and people who you can call. And I'm excited for your summit next week, coming up to that, meeting people, shaking hands and having these conversations. But that second piece is super. That's how you grow.
So and you know, when you say this, it reminds me of a fund manager that I spoke with maybe about a month ago. He was like, look, I pay for all these conferences. I go to these conferences, I talk to these people, but there's surface level conversation. So you have the conversation, they check on you. Oh, hey, Aaron, how's it going? You know, how are the kids? Right. But, you know, so those surface level conversations are great. How can managers penetrate that surface level and go deeper and build a true, you know, long-term partnership, but also, you know, someone's trusting you with their hard-earned money to hopefully put that money to work and actually return capital to them, right?
Absolutely. And that's it. I think the bridge, how to cross that bridge is, number one, you have to find out who the decision maker is. You know, you make friends or connections with an influencer. Is an influencer and a decision maker. Find out who that decision maker is. And I was at a conference here in Atlanta a week or two ago at NASDAQ, and they had some great asset management, consultant, manager due diligence folks up on a panel. And I totally agreed with one who was from LCG, and he said, you need to continually pound on what your edge is. What's your value proposition? Why would because think about it from the perspective of the manager research person making those allocation decisions. My job's on the line.
Sure. I mean, people get paid to say no, essentially, right? It's for their job security. They maintain their job from just saying no, right?
Yeah. And so you have to have a compelling reason why that person would put their job on the line and their credentials and their history of making good decisions to put in your fund or in your investment vehicle. That is for sure. You have to have that crystal clear. And I think so that's the first piece. The second piece is you have to, so that's the verbiage piece. Hey, what are you communicating and compelling that makes that person say, yeah, that's something I want to listen to. Then you have to have all the support around that, the returns, the track record, the assets in there. No one's going to write a $10 million check if your fund's $1 million. So there are some prerequisites to have. And I really appreciate some of the emerging manager stuff you're doing and starting to get from, you know, the 100,000 or 200,000 to the million to the 10 million, because those are access points. Those are gates. You know, once you get to those levels, you should have those conversations. I don't want to get ahead of myself. There's a long runway. A lot of institutions, it's a 3-year road just to get a serious look, a serious look. And then I think from there, so that's the second piece is kind of
we had a fund manager, you know, close a massive institution, but it took 18 months. You know, they see them at an event and say, you know, all these people go to the same conferences, right? If you think about it, like they've got Milken in May. They've got
there's a cadence.
There's a cadence. And then everyone's got their AGM, you know, this month. So you start seeing the same people at a lot of the same events. So, you know, a lot of times the recency builds familiarity, which hopefully translates to trust. But people are following you. People are seeing kind of the knowledge that you're posting out there, the content that you're posting. So it's interesting to see how, and I'm not sure if this is as popular in the hedge fund space, but, you know, I think the new private equity or venture capitalist is going to have their own distribution. They're going to have people that are following them, and they're going to have their own summits. Like instead of them going to, instead of them paying for Milken, or instead of them going to Super Return, they have I don't know, let me just come up with a fake name here. The Black Box Capital Summit, right? And the Black Box Capital Summit is like the new all-in summit, right? They've got a podcast, they got a community, but people that own the distribution, that have the following already, they can leverage that to kind of get everybody in the room, so that they don't have to sponsor like all these events, right? So I think the own media is going to be a big thing. You know, obviously there's regulatory things you got to think about, but think about it, right? Bill Ackman talks about his best trades on Twitter. You know, I mean,
they're out there. Yeah,
he's building in public. You know.
Yeah, no, absolutely. I think but you have to, if people are doing it, you have to do that. That's part of the cost of doing business around here, is to be known and be seen. At EARNEST, I would see after conferences, let's say a consultant was hosting a conference. I would go to that, maybe not a lot of search activity before that. I would go to that conference. Search activity for us would pick up after that conference. It's because you were there, you said hello to the right people, and you were at least communicating, again, what your value proposition is. And then there's a third ring to that Venn diagram, right? It's knowing the influencers and the decision makers. It's having all the prerequisites. Then the third one there is it needs to be in need. Joel, if you want to eat pizza today and I come with you with the best tasting burrito, it doesn't matter how great my burrito is, Joel. You're like, hey man, Aaron, I wanted to go eat pizza today. Like, I want pepperoni or sausage. I don't want a burrito. So all the first two you need to have continuing to cultivate. And then it's the third one that you can't really control. I can't, make you want to like an allocator. You can't say, hey, this is so great. Well, they might already have a solution there.
Yeah. But at the same time, what I've seen, which is interesting, is, there are real estate allocators that actually take a chance and invest in, private equity. And same thing, like if you educated me on why burritos are great, maybe it's a healthy burrito and the burrito is just phenomenally tasty. Maybe I'll change my mandate to eat burritos, right? So I think part of that is like education. So, in a world where like there's, especially, with our fund accelerator program, we've had hundreds of managers go through the program. There's 15 AI funds, right? They all have had the same performance. If you're a hedge fund, you've had the table stakes of like the alpha and like the hurdle rate that you're supposed to meet. So beyond that, the only thing that they can do is choose, right? They're choosing you because they like you and your mission and what you're doing, but they're not investing in, black box capital, but they're investing in Joel, right? Because they like what Joel is doing or what that other person is doing. So I think there's a part of it too, where like after you cross all the table stakes, you finish all the diligence, there's still that choosing of that person that they want to be on that journey with, right?
100%. Yeah, it goes back to like, who do you want to be laid over at an airport with?
Yeah, the airport test. Yeah,
like who if you were laid over, who would you rather spend some time with? Because guess what? If they select you and you're on the platform or you're in the portfolio, you're gonna have a lot of interactions. Like you should be having a lot of interactions. And if you're hard to work with or hard to find information or data, like you need to make that really easy and have a real real genuine relationship with those people, because that's where those conversations come to light. And so I take your kind of challenge on what I said. I think that's right. I think if you're convincing enough to say, hey, take a look at this, because, hey, like everything that's in that pizza, I can put in this burrito. It tastes a lot better and it's half the calories. Will you be like, you know what? That actually sounds pretty good. Let me take a look at that. Right. And then you're now down the road. So I appreciate that perspective. And I agree with that.
Yeah, so I know we're up on time, but I got two quick rapid fire questions. So
let's do it.
What do you think are the best attributes for like the next hedge fund manager in terms of like if you're hiring somebody, or if you're just kind of building your skill set as just an amazing hedge fund manager? What are maybe the top 2 to 3 bullets? And then just give me one piece of advice that you want us to take away. It could be from a relative, it could be from a mentor, whatever you got to take us on.
Okay, great. Awesome. All right. So in terms of attributes for a hedge fund manager, hey, you gotta have conviction in what you're doing. If you don't believe in it, no one else is going to believe in it. So if you've come up or stumbled upon something or developed something and I'm having a conversation to you about it, your level of conviction should come out in how you're explaining it to me. Don't get super into the weeds. Don't talk to me about deltas and gammas and vegas and all those things about options. You need to say, hey, this is what we've discovered. We are exploiting that with this algorithm, and these are the results, and they're super compelling. That I should see some excitement out of you when you're telling me what you're doing. So that's the first thing. The second thing is you have to have a real edge. Joel, I don't know if you've ever seen a back test that was bad. Like no one sends you a bad back test. Back tests are always going to be great because you can tweak the model. So you have to have a real edge and an ability to produce returns. And so those two things in the way that you're telling people you do, I think those are two things: have conviction and have an edge. So if you can pair those two things together, that's the first part of success. So those would be the two. There's a handful more. Hopefully I can come back on your podcast. We can talk about that a little bit more.
The conviction thing, I got one thing to say about that. So I had the founder of the Motley Fool on my podcast.
Yeah, I listened to that, and he went through
was amazing.
Each one of his
Yeah. So I would say about that, I think there's a lot of intelligence that can be crowdsourced. And even if you're part of a syndicate or an investor community or an investor club, everybody's going to, have their consensus, right? But to your point, you want to be contrarian and right. So at the end of the day, you want to pound the table because you believe in it, not just because I don't want to be the one person that sounds stupid because 200 people said that this was the best investment idea. Hey, invest in NVIDIA,
Yeah, exactly.
But I think
great idea, Jim Cramer. Great idea.
Yeah,
Jim.
Exactly.
No, and you know what? I think just because you're right doesn't mean they're wrong.
Yeah,
we can both be right. I mean, there is enough opportunity out there in the market for both of us to be right. So absolutely agreed.
Yeah.
And then you asked me a second question about advice. There's a lot that I could say here. But when you said that to me, one thing popped into my brain, and I'm taking this from Alex Hormozi. I don't know if you listen to Alex Hormozi.
Oh yeah. Good guy.
General business, and just an awesome way to get self-motivated about what you're doing and how you want to go attack the world out there. That's why I listen to him. He's also a gym bro. And so it's great. Anyway, what he says, and he breaks things down really simply. He says, outwork self-doubt. That's my biggest advocate for advice for people is, hey, you're going to have self-doubt. I have, since I went on this venture, I've had a lot more no's than yeses, as you would imagine. And you're going to too, as you start a fund or join a fund or things like that. But the way to combat that is outwork self-doubt. Well, guess what? For every no I get, I'm going to have 15 more conversations. And you know what? If I get 15 no's, that's 15 more conversations that I'm going to have, because I'm going to outwork all the no's. And eventually those are going to turn into yeses. And guess what? Some of the no's that used to be no's might turn into yeses if I work hard enough. So that's my advice to people. Have fun with what you're doing. If you like what you're doing and you like the challenge, it's going to be great. If you don't like it, you're probably going to have to find a different career field. But that is what I would say. I really enjoyed our conversation, Joel. I hope people got value out of it. Not everyone has the same path. I mean, I don't know if any of your listeners were even in the military at all or went to an academy or things like that. But I appreciated being able to share my story, and hopefully some of the overarching themes and lessons that I've learned can help some of your listeners. And I'm always open to have conversations. I help mentor young cadets who are getting out of the academy or getting out of the military. I've had some people who are, spent 10 years in the military getting out. They're like, Aaron, how did you do this? And I'm happy to do that for anybody. I'm looking forward to being at your summit in a week, shaking hands with people and opening up to them and continuing to be hopefully an advocate and a value add to what you're creating.
Thank you so much, Aaron. Really appreciate it. And learn so much, and you're doing a lot of great work and creating impact. So appreciate all the things that you're doing, and looking forward to hanging out next week.
Awesome.
All right.
You.
Take care. Bye.
Bye.